Alright guys, welcome back once again. Look, just basically just going to be mainly focusing on gold, since that seems to be the sort of main sort of play at the moment. I mean, last time we were coming in, I think we were around this zone here, looking to pop this 1810. I think this big sort of ugly sort of down candle here, that was the NFP. So, I mean, ADP came in at a negative figure, and ADP is not necessarily sort of like a prelude to sort of what you're going to expect to get from the NFP. But when you're missing by, like, you're not even missing, you're just getting a negative 300,000 or so that they got in the private sector with the ADP, you could kind of expect that that may flow through to the figures that we got out of NFP. But I mean, really bucked the trend and came in at like 400, 475 or something along these lines. And you just saw this quick little meltdown. But this is what I was saying in that last one. Look, again, all honesty, I got stopped out here yet again. I mean, this drop down here, like, I'm happy to sort of take a little bit of a sort of swing down, but, you know, risk management wise, I'm not prepared to sort of ride that all the way down. So waited for that to play out. I got back in around this sort of like, you know, I think you said 1810 or something. It was around this zone, and that the next day after I sort of licked my wounds of taking a bit of a loss. But same sort of thing. I mean, if this is on the 4 hour, so I mean, if we sort of zoom down, get inside it on the 1 hour, you're seeing not as quick, like, sort of necessarily. I mean, this candle just completely engulfed it one candle after, but this one just came back up and boom, 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 it just trickled up here. And I was actually trading with a mate, and I was saying to him, look, if gold comes up back and undoes this move, that's going to be bullish, like bullish as in that. And so, you know, we're still looking at this main 1830 zone, which we can see we've kissed it a couple of times over the last session or so. And, you know, now it's just sort of really hovering around here. But if we go back out on the 4 hour, I mean, again, this is what we're looking at. This major zone along here that's just been respected since back in July. So what are we now? 9th of February. So, you know, over half a year. Apart from this, obviously this big sort of bit here and obviously here, so okay, not all the way through, but you know, there has been a number of times where you've seen these sharp, I mean, look at these sell-offs coming down from this zone. So, you know, you can see why there's going to be a lot of people, and there's always a little bit of reluctance to get up on the top side of this one here. So as we saw, sort of like, you know, still vaguely respecting this wedge, even though, as I said previously, I mean, a rising wedge is typically a prelude to a break downward. But this was your first attempt to come down. This was your second attempt to come down. So, I mean, when you look at these here and here, and, you know, if they wanted to melt this down, if they were sort of heading down here to this bottom side of this big zone here, 1760s kind of thing, you know, there was perfect momentum coming down in these, had they wanted to follow that on. But buyers were there and bought it up every single time. And that's why I was saying that sort of if we can undo this sort of large move here and move it to the top side, that's bullish, and we're going to be getting a continued push up. So you can still see that it's vaguely respecting this sort of rising support zone here. Till now it's just sort of like stuffed around and popped out the top here. But I'm actually currently out of all the positions. So I am sort of waiting to see what happens around this zone. I mean, typically, as I said, you know, we've seen some heavy sell downs from here. It really depends what's happening. So if we look at the US 10, I mean, this thing's just really sort of come right back here, and it's really sort of just bounced up. At the moment, it's currently sort of giving up this little sort of short-term sort of rising channel that it's sort of been playing with. But again, this drop out here, till we sort of break this sort of 193 zone, and then even if we sort of drag this down here, I mean, that's only really just to bring you back inside this little range here. I mean, if we go at the bottom of 190, okay, then you can start to look a little bit lower. But even then, you're going to have a couple of sort of key areas where you're going to see a bit of a sort of support coming in. And I think with everything going on with the central banks over in the US at the moment, I'd be reluctant to sort of think that this is all of a sudden just going to change course and come melting down here. But the one thing that is sort of coming into play at the moment, it seems, is that although, yes, the Fed are starting to get very hawkish and they're starting to go, look, you know what, we're going to be raising, and we're raising X amount of times through the year. It's the same with the quantitative easing. I mean, sort of like on paper, yes, technically, like rates going up, okay, demand is going to go up for that currency. you know, extra excess printing and that, you're going to see the sort of the demand and that sort of drop for the currency. But if every central bank is doing it, then you're going to sort of think that to a certain degree, they kind of cancel each other out. I mean, you're not going to see all of a sudden, you know, Aussie sort of coming up and sort of dominating the USD, but it's going to sort of par off a lot of those sort of losses that it otherwise would have been taking had they sort of continued, which, I mean, at the moment, the RBA is sort of saying, you know, we're slowing down, but they're slowly turning more hawkish. ECB, they're coming on board with it all. BOE's already raised. So, you know, all these other central banks are doing it. And I think that is what's sort of like taking a little bit of a shine off the USD. And, you know, gold and USD or the DXY, well, you know, either or kind of thing, is certainly just, you know, they're going back to that normal sort of, you know, inverse kind of relationship. I mean, you just see this massive sell down in DXY. I mean, we've seen a little bit of a rally attempt trying to come out of this zone here, but it's just, it's not coming out and firing. So as it sort of come out of this sort of downtrending channel, it's sort of moved out, but it hasn't rocketed out. And when you get these sort of like, okay, yes, it's sort of broken this kind of resistance that we've seen it sort of respect a number of times through here. If you don't get a fire out and you get a bit of a trickle out to the side, it can really just end up being a bit of a sort of bear flag sort of formation. And we can see a further sort of continue to the downside. So again, that's another case for sort of, you know, gold really sort of getting its stuff together and really pushing out the top side of this 1830 zone. So at the moment, I'm just sort of going to hold off, see what happens. We've got CPI coming out for the US and that tomorrow night. I think the figures that they're looking around, I think it was just maybe mid sevens and that. So I think the sort of general talk is that if it comes in around 7 or below 7, it's going to be quite bearish for the USD. So we might see a further sort of continued sell off. And again, that's what's going to be another sort of reason to push gold out to the top side here. If we do get a high sort of print coming in, so, you know, sort of high 7s, or God forbid it comes in any higher than that, but you're going to see probably a bit of more demand sort of coming back in for the USD, because again, that is just one of the sort of prerequisites that Powell was sort of saying, that sort of like, you know, if they want to raise the rates at the next meeting and then sort of continue however many times sort of through the month, through the year, they want to see certain criteria being met. And obviously sort of inflation is still pushing higher. That's one of them. Employment figures came in quite strong. That's another one. So all these sort of things add into a factor of why the USD is going to push a little bit higher if they're still not sort of like getting out of that what they want to get out of it. So yeah, just sort of going to hold off on any gold trades for the moment, see what we can sort of produce. And then, yeah, sort of check back in after the CPI, and sort of, I think we should have a pretty strong sort of trend coming there. I mean, if we get that sort of strong push on the USD, then we can be starting to look down at a couple of these previous zones that we've sort of drawn out. But again, sort of like if we get a little bit of a lower print, I wouldn't be surprised if we get a pop out to the top side here. And then again, we're looking back up in this 1850, 1860 zone. And that's really going to be your big one. Coming back here, we can see sort of quite a heavy bit of sort of consolidation around this zone here. We've got this big falling resistance coming through here as well, which obviously was respected on these times here. So if they can get that push out to the top side there, and you can really test that and push through there, you've got the confluence of, you know, this consolidation zone, so resistance area, plus also pushing through this falling resistance, which we've sort of seen respected from back in sort of November 2020. So if we're getting on the top side of that, then we're looking pretty good for gold. And I mean, then you're looking up around the 1900s and, you know, so on and so on. But first things first, so to get through this 1830 zone, see if we can sort of get past this sort of long-term resistance, and then sort of we can start to try to draw out some nice sort of price targets to the top side. Cool, guys. All right. Good luck for it.